Welcome back for episode 3 of the $10 to $100 trading challenge. I'm using Bitcoin, I'm trading on ByBit, and I am trying to turn $10 into $100 using no more than 10x leverage. Now, the rules are open to change, and we'll see how that goes throughout. I'm also trying to avoid using 100% of my account at any time, although it is just a $10 account. In the real world, of course, you'd be crazy if you're using anything more than just a fraction of your entire capital. And again, as well, you'd be crazy if you're using even 10x. It's ludicrous that you can get 100x on these platforms. Professional traders use cross leverage and don't trade at over 3. So it still remains to be seen whether or not this is going to be doable, but let's hope for the best. Before we get started, none of this is financial advice. I never give financial advice. I'm not a financial advisor. Don't be taking financial advice from people on YouTube, and always do your own research and due diligence before making any financial decisions. So let's take a look at the charts. Let's dive into ByBit just now. Order the 50 contracts long from 6,490. However, I think that's a good thing because we'll probably go on to make a new order in this video, seeing if we can come up with a couple of numbers to be putting in there and a reasonable area to manage risk on. Anyway, yeah, so I didn't actually explain in the previous video about the contracts and things. Each contract is worth $1, so 50 contracts is $50. I deposited $10, so if I were to be trading with 10x, I could just, for simple maths, I could have a contract or a position size of 100 contracts, so $100, using my $10 as margin. So I'd have 10 and I'd have borrowed 90 to have actually got that position. So that's just a little bit of information for newbies. Obviously, if I were to make or lose any money, then all of those numbers go all crazy. And of course, as well, Bitcoin price itself has changed since I deposited, so it's not actually $10 anymore. It will probably be $10.20. I don't know. Okay, but there were fees as well. Anyway, so here we are, and just as the thing that jumps out immediately is that we've got this bullish engulfing candle on the daily chart. This is the daily chart on ByBit. We've got this bullish engulfing candle, and that would suggest that things are a little bit more positive at the minute than certainly they were before. It is the weekend as well, though. There's always that to be considered. If you're new to trading in general, then you might not realize that the traditional markets are normally closed at the weekends, and cryptocurrencies trade 24/7. So it's not just during the week, and also it's 24 hours a day. So that's not standard. So anyway, as a result of that, a lot of the big capital, people talk about institutional money and things like that. Of course, they're not open over the weekends, and you'll find there's places like the Chicago Mercantile Exchange, which have a Bitcoin listing, and that has a lot of weight in the market because a lot of professionals use it. But obviously it doesn't trade over the weekend, which leads to interesting things like gaps emerging, where you would have a gap at the chart because they stop closing on a Friday, then the price moves so much over the weekend, and it can lead to interesting dynamics. And of course, as well, when volume goes down, there's an increased chance of more extreme volatile movements. So the weekends can be a bit different. Anyhow, having said all of that, we have this scenario right now where we had a bullish engulfing candle on the 3rd yesterday, and I think we should take a look at TradingView and see the supports and resistances that we put in before, and then move from using Bitstamp on TradingView to use the ByBit chart, because we used Bitstamp, if you remember, because it had a longer period of history, and for what we're doing right now, I'll be zooming down to a really low time frame, like the 4-hour time frame, to choose an area, so for an entry. Okay, so TradingView. This is the Bitstamp chart, and it's the daily view. And you can see the supports and resistance horizontal lines that we drew on here to indicate areas where there could be potential support or resistance. As the price comes up to it, it would be resistance, and as the price dropped down towards it, it would be potential support. But this is obviously on a bigger time frame than what we're going to be looking at today, because it's going to try and zoom in a wee bit and see things on a lower time frame and make a decision for an entry which might just last us for could just be 10 minutes, could be an hour. See what we come up with when we look at ByBit. But here we are, and you'll see that the numbers, I'll just zoom in actually so you can see what the 4-hour chart looks like in relation to our support and resistance. You can see that the bullish engulfing candle that happened yesterday is here within this range as identified by the lines here. And this is probably where we'll be operating in for the next while. And I do still think that, generally speaking, it's a dangerous area to trade, although I will be taking a trade. We are just flagging after a move a little bit just here, but the what I would prefer to have would be, obviously, from one of these more significant areas, a position. And that essentially we could still be in the middle of choppy waters here, and that's just the way these things go. So it's those supports and resistances are worthwhile, and I'll certainly leave them there. But we'll move on over to ByBit and have a look at a similar sort of deal, but on a smaller time scale. And I say move on over to ByBit, I'm actually still on TradingView and just loading up the data from ByBit rather than from somewhere else. And as a brief, just to take a second to see, you can see how many different listings there are, but more or less arbitrage bots and the like do a good job of keeping the price all within a dollar or two, generally speaking, everywhere you look. Okay, so here we are in ByBit, and I have already drawn in sort of Blue Peter, here's some I made earlier style here. I've already drawn in a couple of supports and resistances. So I just think that we'll have a quick look here, and you can see that this yellow line, if you've been paying attention, you might have noticed this yellow line here. That's the 21 exponential moving average. 21 exponential moving average is really handy. It's good for showing you the current trend direction. So if we're below the 21, then that would indicate that the price is going to keep moving along downwards, and if we're above the 21, it would indicate the price is probably going to move upwards. Now that's a gross oversimplification, and of course as well, the 21 isn't the one to rule them all. There are lots of different moving averages that aren't exponential, simple ones, and exponential moving ones for all the noobs out there. But just so you know, I'm going to be adding more and more information to the charts as we go along, and I just thought I'd start with the 21, so I popped that on here before I started recording, and I also popped on a couple of supports and resistances. So anyway, here's the 4-hour chart, and you can see that the current price in and around this area here, if we're looking where the dotted line of where my crosshair is, comes in at around where there was previously resistance, and as you cross over, resistance becomes support, and you can see over the last wee while we've been supported by this Indiana Jones invisible plank here, and if you look left, you can kind of see areas where I say with these wicks, where you can see it sort of lines up where previously it was coming up and wasn't able to get above it. Depending on your perspective, you could also say that it come below and it was retesting and whatever. Anyhow, here we are. So I think that you could draw a handful of them in here, just taking the easy areas, and da-da. So they may or may not line up with what you were looking at when you were looking at the video here. You maybe thought this line here would be here where these things are, or you've thought that it would be here at the top here. There's everything in all sorts of analysis is always subjective. All analysis is subjective, and technical analysis is no different. So you can choose where you would put your own ones, but what we're looking for here isn't a exact price dollar anyway. It's an area to say, look, this is where there's support and resistance, and we're not going to start splitting hairs or having arguments with other YouTubers about things or whatever goes on in the world. So I think that this gives us a brief indication anyway of, look, we're above the 21, so likelihood is that prices will keep going up. But of course, we could come back down to test the 21 and see, like here, you know, where you touch it. Will that happen immediately? Who knows? You look for confluence between your moving averages and things. So we have between any indicator, between all information, you look for confluences to try and find as many coinciding points of reference so that you can make a more informed decision, of course. So as we see the 21 coming up towards this area where I drew a horizontal support line, you think, well, okay, there's an area here where this might be fairly strong, and if it did come down here, it might bounce. We've actually probably seen that throughout the day a couple of times. The price has been in and around the 7,000. This is a 15-minute chart, and it wouldn't be outside the realms of possibility for it to come all the way back down here again and touch off this. But I think this is where this line here is where I would choose to manage my risk. You know, I wouldn't mind too much if this trade went against me and I'd got in around here and it dropped down to, don't know if you can see where my cursor is here on the screen, down here, and I'd stopped out. I wouldn't be cursing the world, although you would be. Just trying to make a point about stop losses here at the you can choose an arbitrary figure. You could choose a percentage gain or loss. You could choose a sort of pivot point in the market, and the way I prefer to do it is to choose a pivot point. And I would say that if the price were to drop down to 7,225, for instance, that there's a pretty strong chance that this could be considered broken. So I think that would be a good area for a stop loss, for instance. I wouldn't want to stay in that trade, and if I was watching it live and I saw the price go down there, I wouldn't want to stay in that trade. Equally, in terms of taking profit, you've got resistance up here towards the top at 386, but would that be a good place to take profit? Perhaps. Seems like there's a lot of clear air up here towards the next level. But if we look back left, of course it's still on 15 minutes, go back to an hour or something more reasonable. So you can see that if it did go above this 388 level, that there's every chance it could go up as high as 450 or 500. But like I said at the outset, we're going to try and not be too greedy. So if I were to put an order in and want to take profit around about this resistance here of 7387, and I was putting an order in at around about these wicks here of, say, at 7287, you're looking at $100 move there, and that's good. That's a good move to be taken on a short-term trade. Actually, as you look in here, you can see mentioning the 21 and when you're above and below it. Right now we're in and around this 21 on the hourly chart, so it potentially, of course, we just seem to be breaking above it. In fact, probably would have been a good idea had I got this trade in 20 minutes ago. We'd be looking at a bit of profit here already, but that's just the way of it. Who knows? Could easily repeat just like it did here again, and then go up or down or wherever. That's just the way this goes sometimes. So I think we've decided. I don't know if I was very clear there what I was saying. I think we're going to look for a shorter term move here with the $50 trade. Take a long from around about 7287 and take profit around 7387, and hopefully have a first live trade, start to grease the wheels here a little bit. So let's head back on over to ByBit, do that, wrap it up, and then I'll probably sign off on the video. I don't see the price dropping in the next. Well, you never do. You never see it dropping to $20 necessarily just before it happens. Otherwise, you just make your money doing that all day. What did I say? 7287. So buy long. We said we'd have to take profit at 7387, and we're going to put a stop loss in at 7224, I believe, or at least that's what's in my head. So there we go, that's submitted. Now I could leave the screen record going for a few minutes here afterwards and see if it gets picked up, but I doubt it will. But there's every chance that when we make tomorrow's video that we'll have some sort of news report on it. It could be that the position is opened, stopped and stopped out, but the bad thing whenever you're trading is to have opened up a position, if to gone into a good deal of profit, and for you to have not benefited from that in any way, and then for it to stop out. So who knows? Ideally, I suppose we'll check back here tomorrow and see that the trade is not only opened but also closed in profit. But no matter what, it'll be interesting either way. We're only $20 off of the price at the minute, and if it doesn't get picked up, well, that in and itself will be interesting too. So thank you very much for watching. Thank you sincerely for watching. I really appreciate every view. If you comment or subscribe or hit a like or a hate, I would massively appreciate that too. It's absolutely all gold dust here. This is my third ever video on the YouTube, and I'm just getting started. Everything's a little bit rough and ready, so I always massively appreciate anybody that watches to the end, and all support is massively appreciated. So thank you so much, and you could be anywhere but you're here watching this with me. As always, thank you so much, and I'll see you in the next one.